Welcome, Zach Silverstein from Acentria Insurance. Thank you so much for being today with us at another one of our Land Talk episodes. We're very excited to hear about insurance today.
Yeah, I'm sure. Thank you for having me. I've been excited to come on, so I'm glad we're finally doing it.
Awesome. And I'm sure that the information that we're going to give our listeners today about insurance is going to be very, very helpful. So a little bit about Zach. Zach Silverstein is a commercial insurance producer with Acentria Insurance. Since graduating from the University of Central Florida, he has built a successful career in commercial insurance, generating over $2 million in premium during his first year, and currently helping insure more than $200 million in commercial property across South Florida. That's impressive, really cool.
Thank you.
Outside of work, he is actively involved in community service and serves as acting president of the Coral Springs Parkland Rotary Club, supporting local charitable initiatives and community engagement. That is very, very cool.
Thank you.
Seth, by any chance, do you know Nicholas Mao, our immediate past president?
That name is not ringing the bell, unfortunately.
I gotta introduce you to him because he's very involved. He lives in Oakland Park as well, so I'm sure.
Involved in Rotary?
Parkland.
Is he involved in Rotary or CCIM?
Well, he's very involved in CCIM, and I believe he's also involved in the Rotary. I have to.
Yeah.
I have
I'd
to check.
love to meet him.
Connect you guys. Yeah.
Yeah.
It's awesome to see the connections that we make through CCIM, which is how I met you actually, right? In one of our meetings. So very excited, and you guys came on board as one of our sponsors. So we are very excited. Thank you so much for that.
Yeah, of course. Shout out to Stephen Chess as well. I actually met him through Rotary, so it really comes full circle there. And then he introduced me to CCIM.
Awesome. Yeah, the networking and going to the meetings does work, I'm telling you. Yes, absolutely. So let's dive into it. And I have my number one question to you. Let's get started is what are some of the biggest insurance surprises developers run into once a deal is already in motion, which is something that is a lot overseen, right? Because you think of insurance for a building or property, but you don't think of insurance for, something that is being built.
Yeah, it's this is definitely it can be an issue for developers. One surprise that I've seen developers run into is the realization that they should have brought insurance in earlier in the process. When we're having our conversations with underwriters, we need to provide a lot of information, things like geotechnical reports, things like finalized budgets and construction schedules. And if this information is not readily available, what that ends up creating is a lot of unnecessary back and forth, not only between you and your agent, but also between your agent and their underwriter. So this back and forth combined with the rush of trying to secure an insurance option last minute is what leads to getting a lower quality insurance option. How do you avoid this? You bring in your agent 30, 45 days in advance and you provide them everything they need for their underwriters up front. That's how you shift the conversation with underwriters from what do they need to underwrite the deal to what do they need to do to win the deal. And that's how you get the best of what's available in the marketplace.
Very good. And this is something that should be done from the get-go, right? I mean, from when you're working on your entitlements on the property and you're closer to having permits, that's where you should get involved, right?
Yeah, exactly. The more time you're providing an agent to go out to market and have those conversations with underwriters, the better. The last thing you want to do is let it get to the last minute and rush, because at the end of the day, you're always better off giving them more time.
Awesome. Good. Very, very insightful. And what is one thing you recommend to developers who manage their properties in-house?
Yeah. For developers who are managing their properties in-house, what I recommend is get a second opinion. There are a lot of companies out there who find an agent who they have a great relationship with, whether it be, a cousin, whether it be a family friend. And what they end up doing is they refer all of their business to this one agent, when in reality, that agent might not actually have full access to the marketplace. And what can end up happening is, especially in a softening property market like now, if your agent does not have access to the full marketplace, they may not actually be presenting you with the best of what's available. There's also times where I've gone into a deal where someone got a 10% reduction on their property premium last year. Now the property insurance came down 25% beyond last year. So whether it's because they don't have access to the full marketplace or they aren't doing their due diligence with the marketing, it's worth it to get that second opinion, because there's a chance there could be better options available for you
And you know what, for those of us that, for listeners that are, what do you mean when you say properties in-house?
Well, there are developers out there who don't just immediately flip the property, right? They'll keep the properties and they'll manage them themselves. They'll have a property management branch. And when they keep those properties in-house, they are probably going to work with the same vendor they worked for that builder's risk policy.
Got it.
And, just because they started with you doesn't mean they're the best fit to continue with. So,
To continue with.
yeah, exactly. That's what I meant.
Very interesting. For developers and construction firms, what is the number one way that they control their insurance premiums?
For these industries, workers' compensation can be a major driver of premiums, right? So I would say the number one way you can control your workers' compensation premiums is by controlling your losses. Your losses are directly correlated to what you are paying for your workers' compensation through something known as your mod. And your mod is a rating factor that carriers use to...
You said mod, like MOD?
Mod like MOD.
Okay.
Exactly. So they adjust your workers' compensation premium depending on your mod and depending on your losses. So if you have clean losses, what's going to end up happening is your mod will be less than a 1.0 and you're receiving a credit. So you'll be paying less than, you will if you have worse losses. If you have poor losses, you'll be above a 1.0. Let's say you're at a 1.2, you're actually paying 20% more than you need to be on your workers' compensation. And the companies that control their premiums are the ones that are controlling their loss, whether that be through risk management protocols or whether that be through safety protocols. But it's the ones that are it's the ones that are handling the issues proactively and not just reactively.
Very interesting. And what is that acronym stands for? MOD?
The mod. So it's really an experience modification rating.
Okay.
And it's essentially, you have your manual premium, which is adjusted by your experience mod. So if you have an elevated mod, like 1.20, that's going to be an increase on your premium compared to whether you had less than a 1.0 with clean losses, you're actually getting a credit and a discounted workers' compensation premium.
Got it. Learn something new today, for sure. How does a contractor's, next question, sorry. How does a contractor's claim history, experience mod, like we explained, impact a developer's ability to execute and win projects? So they can use they can use that as a highlight, as a plus.
Yeah, I've actually got the perfect story for this one. I was once working with a contractor who had an elevated mod at 1.25. Not only was he paying more than he really needed to be because he had those elevated losses, he was also having trouble bidding and securing deals that he would have been able to had he had a lower mod. Some deals require you to carry a mod below 1.0 to be able to bid on them, right? So he brought us in to audit his workers' compensation program. And what we found were a couple issues contributing to his elevated mod. Things like claim reserves being set too high on some of his open claims, things like payroll classification errors. And once we corrected these issues, his mod actually lowered from a 1.25 to a 0.96. So not only reducing his premium moving forward, but giving him the ability to win deals again. From a development standpoint, this matters because the strength of your contractor pool affects your ability to execute a project, right? So if strong contractors are being ruled out due to things like an elevated mod, that's not only going to affect your ability to work within things like pricing and timelines, but ultimately it's going to affect your success on a deal.
Wow. No, absolutely. I mean, it makes total sense.
Yeah.
And how do subcontractors and workers' compensation exposures create hidden risks in development projects?
Yeah, so a lot of people assume that their subcontractors are carrying insurance as they should be, right? In reality, if they're not, or you can't prove that they are, when you are audited by your workers' compensation carrier, they're going to view those payments to the subcontractors as payroll. Payments to uninsured subcontractors will be viewed as payroll. I once had a situation with a general contractor who had a $400,000 audit. Luckily, we advised them upfront to make sure that he had all his documentation in place for each and every subcontractor he was working with, so that if he was audited, we could provide the carrier the information we needed to make that audit go away. I've also seen the flip side where people are audited and they have no ability to gather the information they need to make it go away. And what ends up happening is they are on the hook for all of that additional premium.
Oh, wow.
Yeah.
Not a good thing.
Company for sure.
Yeah, for sure. And I've actually seen that property insurance prices are finally coming down. Are developers actually seeing relief?
Yeah, for property insurance, they absolutely are. Especially here in South Florida, there are so many more carriers in the marketplace that want to write business, right? And when you have more carriers in the market, what that creates is more competition. And that's what drives premiums down. The development companies that are seeing the most benefit right now are the ones that have well-structured underwriting data and that have clean losses. When it comes to location, properties and projects that are inland compared to the properties that are coastal are seeing much more benefit because at the end of the day, those coastal properties and projects are being perceived as more of a risk, right?
Right.
However, aside from property insurance, when it comes to other lines like auto, liability, excess, umbrella, we are seeing those trending upwards a bit. So overall, it's more of a rebalancing across the insurance stack rather than a decrease across the board.
Which actually that goes into my next question. How much can a property's location make or break getting it insured?
Yeah. Yeah, it's kind of less of a question of making or breaking getting insured and more how much do you want to pay,
How much
right?
exactly? I was
Yeah.
just gonna say it's just a matter of the premium.
Yeah, exactly. So underwriters are looking at location before they're even looking at the building, right? And depending on where you are located, that's going to affect how many carriers want to quote your business. Depending on if you're coastal, Miami-Dade, some carriers automatically are not interested in that. It's not within their guidelines. They don't want anything, within a mile of salt water, let alone the coast. And, if you take that same building and bring it inland in Broward County,
Right?
carriers are going to be more interested. They're going to be more hungry for that business because it's less of a perceived risk. So location absolutely makes a difference when it comes to not only premiums, but also the structure of the insurance program.
Makes sense. And talking about, lower premiums, what's one thing a property owner can do to lower their insurance premium, if there's any?
Yeah, no, that's a great question. I would say when it comes to wind insurance, which is a heavy driver of premium for property owners and developers down in South Florida, it's investing in your wind mitigation credits. And these aren't upgrades that you can only do post construction or during construction. You can do them whenever. These are upgrades like installing impact rated doors and windows, installing secondary water resistance for the roof. And these are the kind of upgrades that directly decrease the kind and amount of claims that property is going to have, right? Which at the end of the day is how underwriters are going to be pricing your property or your project. It's items that are going to directly decrease the amount of claims you have.
Absolutely good information. When you say upgrades in wind mitigation, obviously like impact windows, like
Exactly.
we had a hard hat tour recently with Miller Construction,
Mm.
and it's a warehouse for a TV station, and they had multiple window layers coming into the building. I had never seen that before. Like they had like the entrance, but then after the entrance they had like another wall, and then before the studio there was another wall. And I would assume that
Wow.
they're doing that to help with not only to cover the expensive equipment they have inside, which is millions of,
Yeah,
right? But I
no
would
doubt.
say for insurance also that help, correct?
Yeah, 100%. It's just like impact rated doors or windows. Construction is a massive consideration for your credits, right? You've got different ISO types. Frame is going to be more scrutinized than something like ISO 6 where it's reinforced concrete. And if you can build with superior construction, you are 100% going to see the benefit of that compared to, the frame building down the street.
Interesting. Really, really good info. So, what is one question every developer or property owner should ask their insurance agent?
I would say ask for a marketing summary. There are a lot of agents out there who aren't providing them. And whether that's because you have a long-term relationship and they're not actually going out to market, or maybe it's because they're just handing you a renewal. When it comes to a marketing summary, what that's going to give an owner or developer is full visibility on every carrier that you as an agent have gone out to, right? So we're going to communicate to them why we were denied, why we didn't present this option, why what we are proposing is the best. And if you're not getting that visibility, maybe there's a chance that you're not being presented with the best of what's available in the marketplace. So it's definitely a question worth having in your bag for sure.
That is awesome info. So it's called a marketing
That's, yeah,
summary.
marketing summary, exactly.
Summary. Interesting.
Just
Love that.
yeah, just a list of carriers you'd go into. It's not a tough ask.
Good. And last question for you. What insurance gap do landowners most often overlook on vacant land?
I would say it has to be just carrying a liability policy.
Yeah,
Owners think just because they have nothing, not all owners, some owners think that just because they have nothing built on their vacant land,
they're not
there's
liable.
nothing to insure. But
Right.
in reality, that's not how risk works. You know, whether it
Anybody
be
going through that property? Yeah.
exactly, whether it be a neighbor, a contractor, even a trespasser, if someone comes onto your property and gets injured, there's a chance they're going to be dragged into a lawsuit. So by not carrying something like a liability policy for your vacant land, you're basically self-insuring the biggest risk you have for that property.
Absolutely. I tell all my landowners to make sure that they are covered on that because you never know.
Yeah.
Well, Zach, thank you so much for being with us today. It was very, very valuable information. I'm sure that our listeners are going to be very happy. It's something that I think it's an oversight, especially for many landowners, right? That they don't, like you said, they don't think that they need insurance or because they don't have a property yet or things that they could do to, developers to decrease their premiums. Love the information. We appreciate you. And we're going to put your information below so that people can definitely contact you if they have any additional questions for you.
Yeah, that's great. Thank you so much for having me. No, this is honestly my first time ever doing anything like this, so I've been looking forward to it for like the last week.
All
So thank you so much for
right.
having me.
I love that. And I love your involvement with CCIM. We're very grateful for that. And I see that I love your follow through. I must say that you are following through on everything that we have upcoming or we say that we're going to do. You follow up with email, text, phone calls, and I love that. So I'm sure you're
Yeah,
going to be very, very successful. That's something that anybody should look for in an agent as
thank
well.
you, thank you. And I'm buying my Loop 19 tickets today, so I will be there.
All right. I love that. We'll see you there on July 14th.
Yes,
That's
100%.
awesome. Thank you so much, Doug. Have a great day.
Yeah, thanks for having me.